Hi friends, Simon here from InformedTrades.com. Today is February 5th, 2015. Let's take a look at some of the headlines and charts that have made a difference, some of the things that I'm looking at personally in my trading and investing. First up yesterday, Nestle's corporate bonds go negative, which means Nestle is now getting paid to borrow money. If Nestle issues a bond, you let them borrow money, you lend them money, they will actually give you less money. So if you lend them 100 euros, they would give you 99 euros back instead of negative interest. We saw Denmark last week go negative interest rates with mortgages. Now we're seeing Nestle do that with corporate bonds. This is all relation to, here's a chart you can see, negative yields, just barely negative. Why would you ever pay? This is from the WashingtonPost.com. Why would you ever pay Nestle or anyone to borrow money? Nestle is borrowing in euros, so they're holding a currency that's falling in value, and that's sort of why they're paying you less. That's sort of the rationale. The euro is in a bunch of trouble, which takes us to the euro chart. We are bouncing off here. Yesterday I posted on Informed Trades. To me, this looks like we could get a little bit of a relief rally. We have had a really sharp fall from December of 2014, when we were at 125. Now we're at 112. These charts from TradingView.com, if we just do a straight up Fibonacci retracement here, I think a move to 119 is pretty realistic. That puts us at the 50 simple moving average, 61.8 Fibonacci retracement of this move. That could be an interesting counter trend trade for those who want to play that game. Okay, something to consider about the euro. Anyway, the basic idea, we are getting a little bit of relief there. This is an interesting article from Bruce Crasting. Bruce is one of the few commentators who called the Euro-Swiss collapse. He said the peg was going to about to break. We posted that on Informed Trades. Pretty great call. I would say that's one of the best calls I've ever seen. He called it the week before, which is huge. So right on time, very accurate. Now he's saying that Euro-Swiss is that the Swiss National Bank is still intervening in the Euro-Swiss market and is trying to hold 105. So previously they were trying to hold 120. Are they now trying to hold 105? There are a number of ways to trade this. One, they won't be able to hold it, and it'll go back down below 105. Or he's saying something unbelievable happens. There's so much money flooding the franc now. This has to exit. It's a very crowded trade, he argues. So he's saying there's a black swan event that Euro-Swiss goes back to 150, or not back to, goes to 150, which would be an enormous move. And that's something to consider. I think this whole article, we'll have it posted on InformedTrades.com and in the links of this video. It's a pretty good read. Bruce was totally right, so he's got the hot hand, so to speak. Not that the hot hand is not a term that I would really use in trading, but his insight has been correct before. Here's the Euro-Swiss chart. So this is obviously the big move. We are seeing price did rally a bit above 105. So Bruce is saying Swiss National Bank is defending that level. Let's see. Personally, I'm not trading Euro-Swiss. I do think there could be some great opportunities there. But in light of the volatility, I expect the volatility to continue, and that I can see the rationale that we may get maybe not a move like this, but something pretty big to occur. So I kind of would prefer to be out of it. Another recent headline: Saudi oil is seen as lever to pry Russian support from Syria's Assad. This is in the New York Times, and this is something, if you look at our video on the crash of oil in 2014 that we put out a few weeks ago, one of the things we talked about was whether this was being driven by geopolitical motivations. So one viewpoint, and this is personally a viewpoint that I give credence to, is that Saudi Arabia is intentionally flooding the market with oil. They're willing to take a loss on it, but they're really trying to hurt economies that are oil dependent. So it's a geopolitical move. It's sort of like, you can think of how some businesses may try to undercut another competitor. For instance, Amazon is a classic example in the U.S. In some instances, they'll try to price their products really low, try to price out competitors or force their competitors to sell. Saudi Arabia is sort of doing the same thing, trying to weaken Russia so that Russia is not able to support Syria. This is in the New York Times. I'm actually a bit surprised that they would publish an article like this, but I give credence to it. I think it's pretty credible. Now, what's that mean for crude? Personally, I think it means price has to bounce back up. I think the market is being artificially suppressed in a way, or out, not in balance with pure supply and demand forces, but it's more so geopolitical forces that are causing the huge supply. Technically, I went long right around here, January 13th. I bought the ETF DBO. I posted about this on Informed Trades. And to me, this looks like a consolidation pattern. I'm still leaving capital set aside for a price to fall to the low 30s, which would be support level that we saw back in 2009. Let's see if I can pull that up on the chart here. Maybe go back to the monthly chart. There. Yeah, so this is 36, I should say, 36. Which goes back to resistance level 2003. So this is a very well-established level. I'm leaving capital set aside here. This is where I would really want to enter the bulk of my position if it falls to the level. We are seeing some consolidation here over the past week, so I thought I'd put on a small position here. That's sort of interesting take on oil. Surprised by this article in the New York Times. S&P 500 back into the channel. This still looks a little choppy, and we are seeing a pattern of lower highs. Let's actually see if... So right now we're sort of at the top of a trend line. Let's see if we can break above here. That could give the bull some more momentum. If not, though, that makes it look a little more bearish. We still have a megaphone pattern of sorts in place on the S&P 500. Maybe a little bit easier to see on the weekly chart. There, you can sort of see it. Coming out here, that would put a target on S&P 500 down to 1,700. The Hervina, I'm not sure I'm obviously not sure if I'm pronouncing that correctly. This is the Ukrainian currency. Another big down day for them. You've seen this currency really decline, especially in November of 2014. But another big down day yesterday. Big drop in value against the U.S. dollar. And dollar yen, we're starting to see some consolidation here. And looks like a possible downward trend line. I have an alert at 116. This is support level. I previously added a small position here. I'm willing to add another small position if price gets to this level. Of course, I really want to hold out a little bit of capital before it moves to 109, but don't want to get too greedy or want to balance myself out. I'll nibble away, add a little small position if price falls to 116. I'm holding this a bit longer term position. I'm holding it for at least a move to 150. That's about it for the news and charts that we have today. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading and investing, and we'll see you tomorrow. Take care.